Hey, welcome to the Guaranteed Retirement Guy Show. Today, I want to talk to you about if you want to fund an annuity with maybe a 403b versus non-qualified funds. I get a lot of different kind of accounts that people will bring over to me, and they're wondering, hey, can I purchase an annuity with a 403b? Can I do it with a 401k? What about non-qualified funds? Like, how does that work? And I'm going to show you. So I'm going to share my screen, and I want you to see exactly how this could work for you. This is based off of, us taking income as a 403b. So if I go in here and I'll say, all right, I want this to stay a 403b, which means if it stays a 403b, then I only have access to these carriers. These carriers will actually take it in the form of a 403b account. Now, the most income I can get from that is $33,750. What if I want to, roll this from a 403b into an IRA? Most of the time when you have an employer-sponsored tax-deferred account, 401k, TSP, 403b, usually what you'll do is you would just roll that over into an individual retirement account, which is, of course, an IRA. And of course, if you have a Roth, it's the same thing. You're just going to transfer it to a Roth. So you can see I'm kind of limited, though, if I look at a 403b only. If I'm saying, hey, I want this to stay a 403b, then I'm kind of limited. If I were to go to, let's say profit sharing, then you can see the list will change a little bit to now Allianz is the best one, and they'll keep it as that type of account. Okay, what if I change this to a Kia? Okay, Allianz as well. Let's go into a stretch, non-qualified stretch. Now we've got Emeritus being the best one. So, but this is only if you keep those certain accounts the way they are. Most people don't. Most people will just take their accounts, whether it's a tax-deferred account or a tax-free, where you've been taxed on the contributions like a Roth, and they'll just convert it over to a regular traditional IRA or a Roth IRA. And so if we look at that, we'll say, okay, let's look at IRAs. Okay, because most of our retirement accounts that are tax-deferred are going to go into an IRA. All right, now it looks a lot better. We got a lot more options, and you notice the top option now is like a couple $1,000s more than the other one because we were able to put it into an IRA. Most insurance companies work this way where, they take your rollover from your retirement account and they put it into an IRA, whether it be traditional or Roth. Okay. So anyways, definitely the income's better on this. Now let's see if I stretch the income out just a year. And of course we want to make sure there's no payment decrease. A lot of these will give you a balloon payment in the beginning, like higher payments per year for like 5 years, and then it reduces it quite a bit. I typically do not recommend those. So if I was to look at this, then we can see the highest income is $38,000 for with F&G if I were to wait 1 year. Now this is an IRA. If I did any funding, a non-qualified, meaning I take my money from a bank account or from a brokerage account, it's already been taxed. So F&G is still the top one. Okay, so that's good to know. Sometimes it's not. All right, so what if I went in here and I said, okay, it's a spousal IRA. Then you got these ones. So there are different companies for different scenarios. IRA Roth, you can still see same income, but now of course it's tax-free income. Whenever we sit down together, if that's something you want to do and you want me to look at your specific situation, go ahead, book a call. You notice there is a link below this video, and we'll look exactly at what type of account yours is. And of course, most of the time, it can transfer over to a regular an IRA or a Roth IRA, and you're fine. So usually there's no issues with that. Sometimes there is, it just depends. It depends on the company, depends on the type of account it's in right now. And of course, it depends if it's allowed to be transferred, because sometimes they're not allowed. Like I talked to some people that have accounts with TIAA, and they are under the assumption that they can move their money out, but sometimes they can't just depending on the type of account. And unfortunately, most people really didn't understand how it was set up. And so they'll come to me and they're like, man, if I would have just known, that I should have set up like this, I would have never done this. But, you don't know what you don't know. If you want some of your questions answered and you're thinking about, purchasing an annuity and you want the highest income, go ahead and reach out. Happy to help you. I like showing everything. I like transparency. If you ask me how much I'm making, I'll tell you. And if you are just looking for the best annuity possible, I'm really not biased. I'm gonna show you. I'll recommend, but I want you to see everything in real time on our call, so that you don't feel like I'm hiding something. All right. So hope you enjoyed the video. Go ahead and click the link below if you want to schedule a call, and we'll see you next time. Hey there. If you like watching me and I'm getting you the answers that you want, let me know in the comments section. Look forward to hearing from you.